We have been joined by the management of Orient Cement. It was a good quarter for them. Revenue from operations as well as volume saw a healthy growth. EBITDA per ton, we had the management earlier. They said that they're going to improve sequentially, and bang on. That was the case. Mr. Deepak Khetrapal, the MD and CEO at Orient Cement, joins us on the show. Hi, Mr. Khetrapal. Congratulations. It was a rather good quarter. That's quarter 4. But the street wants to see a better performance coming out from Orient Cement. So for FY24, what kind of a guidance can you give us on 2 parameters? One is on volumes. You have been saying you'll outgrow the market. So in that sense, what do you expect the market to grow, and what kind of volume growth can you do from around this 5.8 million tons? And the EBITDA per ton has improved to more than 800 rupees per ton. At current reckoning with pricing, pet coke prices have declined, cement prices are stable. What kind of an EBITDA per ton band you're looking at?
Not many questions, Nigel. Good morning to you and to all your viewers. Quickly, yes, we had a solid Q4. In terms of next year forecast, we believe we should be targeting between 6.3 to 6.5 million tons of volumes against about 5.8 that we did last year. On the EBITDA front, while we have about 840 rupees per ton of EBITDA in Q4, for the year as a whole, we are at about 650 rupees a ton. My own reckoning is that if we just focus on the management actions that we are taking internally in terms of waste heat recovery project plant being commissioned, it's under commissioning right now, solar power being put in, the premium products being sold with a lot more volume, we believe between 250 to 300 rupees a ton of EBITDA accretion should happen through the management actions themselves. Now, if we bake in just about 10 rupees of additional prices in the market for the year as a whole on an average, we're talking about another about 140 rupees or thereabouts of EBITDA per ton. So I do believe that with about 6.3 to 6.5 million tons of volumes with EBITDA, I'm assuming that at least over the year we'll have a 10 rupees at least increase in the prices. If we include that, then we are between 1,000 and 1,100 that we've been talking about in the past as well.
Okay. Mr. Khetrapal, thank you for all of the numbers. Appreciate them. Of course, we'll drill down further into numbers, but just wanted to understand from your end how the demand situation is at the moment. Which are the pockets where you are seeing an up move in demand? Is it more, government orders? Is it private-led orders? And also, if you can help us with the market share that you're sitting on currently in certain geographies and whether it's gone up or down in the recent past?
No, in terms of the market demand first, the demand I still believe is below par. We had a below par month of March, and also in April, the momentum, we actually have had degrowth from the month of March, month on month, if we see. So it's still to pick up and build into what we expect in the pre-monsoon build-up and the construction that takes place. It's not there yet. Because the rains also have been pretty prevalent in all of our markets. In terms of the strength in the market, it's largely still being seen from large projects, government funded or private. The B2C demand, at least in our side of the market, continues to be slow. But the good part is in the B2C demand, what we are seeing is a very strong traction for our premium products, which despite a 9% degrowth in our consumer sales last year, our premium products actually grew by 22% in a market where it grew by 9%. So that's an overall, I would say, perspective on where we see the market demand currently. But it's still early days in the financial year. We're hoping momentum will build as the elections come closer.
All right. Demand needs to pick up, Mr. Khetrapal, because we're going to hold you to that 6.3 to 6.5 million tons. You did it a few years ago, but we want to see that yet again. All right, let's focus on inorganic growth. Over the weekend, there was these reports that suggested that Sanghi Industries is on the block. That's a 6 million ton plant out there. Have you heard anything about that? And if yes, would you be interested in a big cement plant on the west coast with ample limestone reserves?
Nigel, I have read it in the press over the weekend, Saturday, when I saw the newspaper that saw it there. We have not been in contact with them, as simply because a capacity of 6 million tons is too big for our balance sheet. We have to remember what balance sheet, what our bandwidth is. And in any case, we have now our brownfield expansion plans that we have already put in place. You covered that on your show last month. So as of now, no, we are not looking at Sanghi at all.
All right. So not looking at Sanghi, we'll have to see whether or not, those reports are true, because the valuation that they're demanding is very, very high, but we'll wait by for that. But you mentioned about that brownfield that you're looking at. When do you officially announce it? What is the capex you're looking at? And I think Karnataka is the region that you were looking at, right? Out of the blocks first. That continues to remain the preference?
That's right, Nigel. Simply because in our Karnataka plant, we have operated last year at 100% capacity. And that part of the market is still growing, and we do not have more cement to sell in that market. So obviously, the Karnataka plant expansion comes on the front burner, and we're working very, very hard so that we can start the construction, let's say, in about 6 to 7 months from now. So that's all the efforts are in that. And the total, I would say, on that particular expansion should be about 1550 to 1600 crores, out of which we expect to be able to spend 500 to 600 crores within this financial year. And besides that, the capex that we'll do to prepare for our Devapur, our Telangana expansion, and the new greenfield plant in Rajasthan. Total capex during this year we expect to be around 1,050 crores.
Okay, so 1,000 to 1,050 crores of capex in this year. You know, it's interesting at a time when you're saying the demand is below par and you're not too sure about a recovery. There's a degrowth month on month. It's still to pick up. Would you want to perhaps scale down your capex and go a little slow on expansion? Also because maybe that would result in higher debt. Just trying to understand what is the debt on the books currently, and on the capex plans, given that demand is not that great, would you still go ahead?
Sonia, you have to see the nuance in the market. I'm talking about investing in brownfield expansion in a hurry at the plant where last year I've already used 100% of my clinker capacity. So if I do not produce enough, I will be actually pushed back in the market. I'll concede all my good market that I've created for myself to others. In terms of debt, we are fairly comfortable. Our project debt as on date as we speak is just about 240 crores. And that also, by the time we start the construction, some bit more of that will get paid by then. And the total debt, as we say, when we start putting up a plant, it will take us about 18 months before the capacity kicks in. So if I do not start construction in third quarter of this year, we'll be just too late. And by that time, the customers would have moved to some other brands, which is too big a risk for us to keep taking.
And you'll hear the brokerages saying that you're not being aggressive as well. So watch out for that. This 1,000 crores of capex, some equity raise will be part of it, or how much of it? Split it up for us. Debt, equity, and internal accruals. Very quickly, sir.
No, look, Nigel, the 1,000 crores that I'm talking about this year will not need any equity infusion. We have a fairly strong balance sheet today with the net worth of more than 1,600 crores. So we will start with some bit of debt right now. If the equity part we talk about only if we want to do 2 or 3 projects parallelly. If you're going to do them sequentially, I think the equity raise will be necessary.
Okay, so debt and internal accruals. We get that. Thanks so much, Mr. Khetrapal, for joining in and giving us those details. Big numbers that we've got, 6.3 to 6.5 million tons. And the EBITDA per ton as well can improve, providing pricing as well as the, the efforts that the management is making. But